Welcome back, fellow value investors. In this video, I'm going to be covering a high-quality semiconductor company by the name of Qualcomm. Qualcomm has been around for many years, and they provide a lot of the technologies that make mobile phones function. They also have a business that provides the technology for Internet of Things to function, and they're getting into the automotive technology space as well. It is a company that's been around for a long time. I'm sure you recognize the name. I'm going to analyze the company, tell you what I like about the company. I'm going to value the company based on free cash flows as well as earnings per share. And once I have a value of the company, I'll compare it to the current stock price and see if it's a good buy or if it's not a good buy. I'll share that with you as well. Do me a favor and like my video and subscribe to my channel. Also, please leave a comment on Qualcomm. Love to hear what you think of the company. Qualcomm has a rich history of working with the military, and it was able to develop a lot of technologies for mobility. And then they took those technologies and took them to commercial markets to help mobile phones, principally the iPhone, would not happen without Qualcomm. So the biggest business they have is headsets, where people are using mobile phones and they're using Qualcomm technology in those phones. A big business for them is Internet of Things. And these are machines, devices that are communicating with central enterprise systems, communicating their data, their performance, their production, all kinds of data that gets reported back to the enterprise for informational purposes, or maybe that machine's breaking down and it wants to communicate. So Internet of Things business is quite big for the company. A segment that's growing for them is automotive. So they're putting their technologies in cars. Cars are getting smarter and smarter with more and more technology, and Qualcomm is growing in that space. So that summarizes the business they're in. I like the semiconductor space. I think these revenues tend to last a long time. There's a lot of intellectual property, a lot of intelligent people at Qualcomm creating value for the marketplace and creating a lot of value for Qualcomm. So I like the business, I like the industry, and their management team's excellent, just really driving the company toward achievable goals that create more revenue, greater profits, and good cash flows for the company. One of the realities for Qualcomm is the markets that they sell into, the markets are down. And the main reason is mobility or mobile phones. In 2021, 2022, a lot of people renewed their device, and demand for a new device by many people went down a lot in 2023. That drop really caused a drop in revenues in Qualcomm because their technologies were not needed because fewer units of smartphones were sold. So that big drop in revenues was the result of the market really taking a breather, taking a step back. With the drop in revenues, profits also went down, and that's all understandable. As mentioned, headsets are really down 22%, and that's their biggest category. Automotive is growing, and Internet of Things is also down. I'm going to value Qualcomm using earnings per share as well as free cash flows. For earnings per share, I'm going to take the next 4 quarters, which look good. The company is beginning to grow again and see their revenue rise, and their earnings per share is going to be nice and consistent through the next 4 quarters that I will use. Historically, in the semiconductor space, a P of 24 is the average. Qualcomm, if you look at the trailing 12 months, it's down around 16. I'm going to use a higher PE because I believe Qualcomm is a good quality company that deserves to be closer to the average in the industry. So I'll use these particular next 4 quarters for earnings per share at a higher PE to value the company based on earnings per share. The sign of a valuable, strong company is that when revenues are down, profits are down, they still generate a lot of free cash. And that's the case for Qualcomm. They generate really good cash flow, and I'm going to be using cash flow as the second valuation method for the company. And that's what separates the mega caps and the super valuable companies is their ability to generate cash. I believe Qualcomm's currently discounted by 20%, and that's based on a blended value of each share is worth $163.77. The stock market will sell you shares for $136.68. I get the blended value, by looking at a value based on free cash flows and a separate value using earnings per share. For free cash flows, I'm going to use the cash flow from 2023 as a starting point, and I'm going to grow those free cash flows at 5% for the first 4 years. After the 4th year, I'm going to grow by 3% to get to a terminal value, which is all cash flows after year 4. The company is a quality company with a quality balance sheet, so the discount rate is going to be 8.5%. Based on that discount rate and all those cash flows that I expect, the present value of all those cash flows is $176 billion. I'm going to add the cash they have on their balance sheet and take away debt to get to an equity value of $172.5 billion for Qualcomm. The market cap currently is $148 billion for the company. And once we look at per share level, using free cash flows, each share is worth $155 a share, but the market's selling them for about $137 a share. So there's about a 14% discount if we look at the cash flows the company is going to produce. Looking at earnings per share, here are the next 4 quarters for earnings per share. I'm going to use a PE that's closer to the industry average because this is a quality company and they have good growth prospects. So I'm going to use a higher PE. I think it's appropriate. And I'm going to use a growth rate of 3% on those earnings per share. So based on those factors and using this formula to get to the value based on earnings per share, I get a per share value of $180.47, which is much higher than $137 that the stock is trading at. So it offers a 32% discount if we look at earnings per share. I blend the two, but I use 2/3 of the free cash flow method in the weight, and then 1/3 from earnings per share to get to a blended value of $163.77, which gives you about a 20% discount on Qualcomm stock. The balance sheet's in great shape. They have really net debt of about $4 billion, but they generate a lot of EBITDA. So they could actually pay all their debt off in about a quarter of a year. Looking at where the stock price has been over the last 12 months, there has been a lot of volatility in Qualcomm. I think that drop in the sale of mobile devices has really affected the company. Now, this is good news for a good value investor because Qualcomm's a quality company, and there was a really nice opportunity to buy shares in this zone and really take a ride up on value. I unfortunately didn't buy any shares during that time, but I'm just pointing out to a value investor, volatility is my friend. You can buy shares here, you can buy shares here if you do your homework and you buy at the right time. So they've seen a really steep climb along with a lot of stocks, but they're really doing well. They have a small discount left, and that has been their stock for 12 months. Even though we've seen these big, peaks and valleys, the stock is up about 21% year to date, and they pay a dividend of 2.4%. So should I buy Qualcomm stock or stay away from it? Let's take a look. Let's talk about the company. First, I think the company is terrific. I think the business is good. I like semiconductor companies. I've done really well with semiconductor companies. So the company is really good. The industry is great. The management team is excellent. The balance sheet's excellent. So really good shape with the balance sheet. They offer a small discount, so I gave them a small check mark. So my intent is to buy on a pretty good pullback. The stock doesn't have a big discount, so I need to be careful not to buy close to a fair price. A fair price is for another investor. I'm a value investor. I need a discount or I'm not buying. So I'm going to wait for a pretty good pullback before I buy Qualcomm stock. So that's my review of Qualcomm and my plan with the company. Qualcomm's a high quality company, just an excellent example of another American success story, headquartered in San Diego, that is now a huge company. Good for them. I'd love to hear what you think of Qualcomm. Please leave a comment on the video. Let me know what you think. And please like my video and subscribe to my channel. Thanks again for watching. Good luck investing.